Welcome back to the Chartist Corner, the podcast where we break down trading into useful conversations. I'm Shaun.
And I'm Melika. Today we're diving into what many traders call the Bible of Technical Analysis, John J. Murphy's book, Technical Analysis of the Financial Markets.
If you've Googled best trading books, this is always at the top of the list. It covers not just the what of charting, but also the why. Quote, "We'll break it down from core philosophy to advanced tools."
Whoa, so whether you're starting in stocks, Forex, or crypto, or you've been trading for years, this episode is packed for you.
Exactly. Grab your coffee, open those charts. Let's get into it.
All right. Shaun, Murphy opens the book with strong statements about the philosophy behind technical analysis. Can you explain his three main premises?
Sure. Murphy says technical analysis is built on three big ideas. First, market action discounts everything.
Wait, what does market action discounts everything mean?
It means every piece of information, earnings, news, economic data, is reflected in the price. The chart becomes the ultimate truth.
So we trust that the market has already analyzed news events for us? If a company releases bad earnings but the stock keeps going up, it's the market knows something we don't?
Exactly. Technicians focus on price and volume, which represent the crowd's behavior.
Oh wow, that's kind of wild. It's like a collective decision-making process.
Right. And then there's the second premise. Prices move in trends.
Wait, so if I see Bitcoin making higher highs and higher lows, that's a good sign, right?
Exactly. Once a trend is in place, it's more likely to continue than to reverse.
That's so cool. And about the third premise, history tends to repeat itself?
Right. Chart patterns come into play because human psychology doesn't change. Fear, greed, and optimism create similar price behaviors over time.
So it's almost like a soap opera. The same drama just keeps playing out, but with different characters.
Laughs. That's a great analogy. Yes, Murphy's philosophy is about trusting the chart because it captures consistent human behavior.
Wow, I love this. So, moving on, traders need tools. Can we start with trends?
Definitely. An uptrend is a series of higher highs and higher lows, while a downtrend is lower highs and lower lows.
Ah, got it. So if Ethereum is making those zigzag patterns upward, that's a good indicator to buy?
Exactly. If Bitcoin is making higher highs and higher lows, a smart trader will look for pullbacks to buy into the strength.
Which brings us to support and resistance.
Right. Support is where demand stops price from falling, and resistance is where selling pressure kicks in.
So if Ethereum keeps bouncing at $1,500, that's a support level, right?
Yes. And when support breaks, it often flips to resistance.
Oh, that's so fascinating. What about chart patterns?
Murphy discusses several, like the head and shoulders, which is a reversal pattern, and triangles, which are continuation patterns.
It's like reading the market's body language, isn't it? You can sense when it's about to freak out.
Exactly. Patterns tell a story.
And why does Murphy emphasize volume?
Volume precedes price. A breakout on low volume may fail, but with strong volume, it's confirmed.
Good analogy. You wouldn't want a quiet party, it's the people that make it lively, right?
Chuckles. Yes, that's a fantastic way to put it. Now, about indicators, moving averages, RSI, MACD.
They all work together, right?
Yes. Moving averages smooth price and show trend. RSI measures momentum, and MACD indicates momentum shifts.
Okay, so the best use is combining them? Like one big happy family of indicators?
Yes, when they align, that's powerful.
All right, moving on to advanced ideas. What's multiple time frames?
Look at charts across time spans. A bullish 5-minute chart can still be bearish on the daily. Always align with the bigger picture.
Whoa, that's kind of mind-blowing. It's like looking at a picture of a sunset, but from different angles.
Exactly. And then there's intermarket analysis.
What's that about?
It shows how markets connect. Bonds affect stocks. Commodities affect currencies. Currencies affect equities.
So TA isn't just one chart. It's like the whole ecosystem?
Yes, exactly.
That makes so much sense. So what are the top 3 lessons for our listeners?
Well, first, trust the charts. Price and volume reflect everything.
Got it. And what else?
Second, master the basics. Trends, support/resistance, chart patterns.
And the third?
Use confirmation, volume, indicators, or time frames.
The aha moment is realizing TA is really about human behavior repeating itself.
Yes, and listeners, don't try to master everything overnight. Start with trend lines and support/resistance.
Patience is key, right?
Exactly. Murphy's book is essential because these foundations apply to stocks, Forex, or crypto.
That's why it's called the Bible of Technical Analysis.
That's a wrap for today's episode of the Chartist's Corner.
Thank you for joining us. If you enjoyed this breakdown, hit subscribe.
And leave us a review. It helps other traders find the show.
Until next time, keep learning, keep practicing, and remember, the trend is your friend.
Take care, everyone.